Hello, this is Alex with MasterChartsTrading.com. Today is Friday, October 9th, 2015. This is Market Recap. First, I want to say that our trade alert services are finally live, and you can sign up for them at MasterChartsTrading.com. This week. We will look at the stocks which continue the rebound, and the breadth is indeed improving. But I still think that this is a rebound within a bigger downtrend, so this could be a bearish setup. Unsurprisingly, bonds pulled back. We'll look at TLT. Also, we'll look at the dollar as it pulls back, and I still think that is within a longer-term uptrend. And of course, since the dollar pulled back, many commodities are benefiting, including gold and gold miners. And we'll look at oil, which may have experienced a breakout. All right, so let's look at S&P 500. Large cap index. So this is a SPY, which is kind of like a proxy for the market itself. And I use S&P 500 as the proxy because pretty much everything else has a very high correlation to all of the stocks. Many stocks have a high correlation to the general market. So if you get S&P 500 right, pretty much everything else falls into place. So here in this chart we have a what appears to be, or what the bulls would like to call, a double bottom and a higher low. So indeed, this is so far is a higher low and a rebound, which was actually quite powerful from the September lows here. Now, this breakdown is still a dominant feature of this chart, in my opinion. Also, you can see the 50-day moving average, the red line, is now below the 200-day moving average. So that's one of the signs saying that this is now a bearish security. Looking further under the hood of the market breadth did indeed improve. You can see that S&P 500 new highs, new lows percent is now above 5% threshold, which is a good sign. And also the advanced decline line and advanced decline line did close above its mid-September highs. So that's a positive. So all of those are positive signs. However, I still think that the bigger trend is down. So at this point, looks like this S&P 500 is actually at resistance level. So I think that if we get a confirmed signal, a confirmed bearish signal, I will go ahead and take it. So let's look at the next chart, which is showing slightly longer term picture of S&P 500. Now, once again, it's a similar thing. It's a bearish security. Well, I consider now it being a bearish security, and I'm looking for overbought conditions within a bigger downtrend. So number one, the evidence is sort of mixed right now. So you can see that the short term and the long term, the percentage of stocks above the 20-day and the 50-day moving average are now above the 60%. So that's a positive sign, especially for the 50-day moving average. But the percentage of stock above the 200-day moving average is now still below 50%, and my threshold is for bullish markets is for this indicator to be above 60%. The same goes for bullish percent index, which shows the number of stocks on the pointed figure buy signal. It's still at 50% and has not breached the 60% threshold. So as of right now, since I am considering this a bearish security, I'm looking for overbought conditions within a bigger downtrend. And now overbought condition is present. You can see that the percentage of stocks above the 20-day moving average is now above above 80 even. 70% is a good threshold, but 80 right now it's at 85. So I'm looking for something like a drop in the percentage of stocks above the 20-day moving average to maybe below 60, below 70 here, which would be like a nice trigger to go short. And those of you who are now signed up for our mailing list, and those who are going to be subscribing to our trade alert services will receive an actual email showing when indeed that happened, when I went ahead and opened the short position. All right, let's next look at bonds. TLT, iShares Barclay 20 plus year Treasury Bond Fund. So unsurprisingly, bonds came under selling pressure this week as stocks rallied. This is kind of a normal relationship when money comes out of bonds. They have to go somewhere, and one of the logical places that the money rotates into is, of course, stocks. Now, in my opinion, bonds, TLT in particular, are still bullish, and actually my buy point was right here, excuse me, in mid-September. For now, I have it's pretty much break even right now, but there was actually a disbursement of dividends here in second, I believe. So, if stocks, as I mentioned before, if they run into resistance and pull back, bonds are almost certain going to benefit. So. Unless we completely collapse from here, I think TLT will challenge the highs from October and may eventually challenge the highs from August here as well. Next, before we go and talk about gold, I wanted to show a chart of the US dollar index. Now, apparently there is more than one US dollar index, and this particular one is US dollar index and daily chart as traded on FXCM, the Forex exchange. So this is, in my opinion, still a bullish security. You can see the red line is above the green line, and we're making a series of higher lows and higher highs. Now we're pretty close to 52-week highs. I think 52-week highs are a little bit further up here, but in any case, yeah, we did get a weakness in dollar. So all this week, actually, dollar sold off, and I think it now became oversold. So a rebound in the dollar here could potentially challenge these highs again. Of course, provided we do hold this low and even possibly this low. If we don't hold this low, we may have to reevaluate the entire posture on the dollar. So if this low and this low holds, then I think the dollar will rally and the commodities will come under further pressure. So let's look at gold next. Okay, so this is a gold spot price daily chart. So gold this week actually had a nice continued its rebound here, a rally from last week. It did come basically again at resistance. So we have here 3 peaks here at resistance levels. We could easily fail here and collapse, or alternatively we could just punch through this resistance level and come to the 200-day moving average. Now this is some serious resistance here at 200, and then further up here and up here. Now if we manage to close above at the very least 1205, but I'm guessing even further 1225, if we manage to close above these highs, we may need to reevaluate the bearish posture on the gold. For now, you can see that MACD this indicator is in the positive territory, so I consider this to be overbought, and I'm looking for shorting opportunities. Now, if you, interestingly enough, the on-balance volume is trending lower, while the index is actually while gold itself is trending higher. So I wonder if we're going to be getting a pullback sometime soon. I certainly think we will. So let's look at GDX next. Excuse me. Okay, so this is a longer chart of GDX, Gold Miners ETF. So it's a little bit of a busy chart, so let's go over it kind of slowly. First of all, it's a bearish security. You can see that the prices are clearly moving from the upper left to the lower right. This red line, the 50-day moving average, is below the green line. The 200-day moving average, we were just hitting 52-week lows continuously here. As I mentioned last week, this $13 area seems to be of importance to GDX, and it seems to have held on multiple retests here. And then we had a powerful rally. This is about 23-25% rally, depending on from where you look. So this is a pretty powerful rally, and it's clearly overbought. Now, we did close above resistance here. So that's a that's a positive sign. The bulls for now are having an upper hand. Now let's look at a longer term perspective. You can see the gold miners bullish percent index. This is back in beginning of the year or end of the last year. It was here at 0 again, and then we rallied from it as far as 50%. So gold miners bullish percent index, you can see that we had a very powerful rally here as well, and then of course completely collapsed. Looks like we have some similar right now as well, and we are at 30%. So can this improve further? Sure, right? It was here at 30 and then continued to 50. So even though we're already 23% up, this rally from here to here was about 36%. So there's certainly room to run here. Next resistance level, of course, is at around $16-17 in this area where the 200-day moving average is coming in. So certainly a powerful resistance area there. Now, let me just zoom in a little bit, go back to 6 months chart. So I'll show what I mean about advanced decline lines. So even though the price actually closed above the August highs here, the advanced decline line actually is trending lower, and so does the advanced decline volume line. In fact, we hit a new low in both lines in just a few weeks ago. So this is a bearish divergence, and this is a bearish security, and in a bearish security, this doesn't look good in my opinion. So if we get any further strength, I think it would be shorted basically, and I will be looking for a shorting entries as well myself. For now, we may actually continue higher, like I said before. Now, on balance volume is showing signs of accumulation. So this is kind of like a mixed picture right now. There is a signs of accumulation in some indicators, and there are signs that we may see lower prices in other indicators. Since this is generally speaking, a bearish security, I am not interested in bullish setups for now, and I'm looking for entries on the short side. All right, and finally, let's look at oil, West Texas Intermediate Oil daily chart. So we had a really powerful counter trend bounce after hitting multi-year lows here, and then traced out what appears to be like a flag. Like this is a handle, and this is a flag or a pennant. Here, I For me, this is still a bearish security, so I would be looking for bearish setups, and this was a bearish setup here and a trigger. So I went ahead and opened a small position, a half position in oil inverse ETF called SCO. At this point of the game, even though there was a pretty strong looking candlestick here, my short stop was not yet hit. And you can see here on Friday, actually, the price was rejected, what I think was rejected at the 200-day moving average with a shooting star candlestick. Now again, we're already overbought, and this is a bearish security. This is a recipe for a drop lower, especially should dollar strengthen. As I mentioned before, oil and all other commodities, or most other commodities, will most likely come under pressure. As far as the on-balance volume, another interesting indicator, it's not showing a breakout. You can see that this is a 422, this is 368. So far, I don't see a lot of oil, a lot of volume behind this, what appears to be a powerful move. So we will see if this breakout continues. If this breakout continues, then I'll close out this position with a small loss. Alternatively, if we roll over and my price comes to this to my entry point, I'll add to the position. Obviously, I won't add to the losing position. All right, let me just show you how to find us on the internet. Please go to MasterChartsTrading.com. MasterChartsTrading.com. We do have trade alert services now open, so please sign up for our trade alert services. We have 3 weeks free subscription trial, and then $19.99 thereafter. If you sign up for our mailing list, you will get a discounted membership if you sign up for a mailing list. Okay, thanks for watching, and have another great trading week. Bye-bye.